If there's one thing the EU loves more than regulating things, it's over-regulating things. And to talk with us today about this story and others, we want to toss it to Anton Iribozov, the product manager at Xapo Bank, and he's going to help us, dissect some of this story. Anton, can you hear me?
Hello, Hank. Thanks for having me. I can hear you very well.
Oh, and I can hear you good, my friend. How are you doing this morning? It's great to have you on the show.
Yeah, I'm excited to be here. It's my first time, so hopefully we can have a nice talk together.
Absolutely. You know what they say, you never forget your first time on the blockchain report. So we're super excited to have you here today. So let's dissect this stablecoin news that we've been hearing here. And you're the expert here, so I would love to pick your brain and see what your thoughts on it. So my first question is, does Binance's move signal an existential risk for USDT in the regulated markets going forward? What are your thoughts on that?
No, Hank, so we should not be surprised from this decision from Binance. Let's deep dive together on the three main problems that the stablecoins are solving. The first one, stablecoins, is facilitating transactions internationally. It's used for remittances. We have members living in Argentina but working for US companies. We have members in Xapo Bank living in China but having family in Singapore. So those members, they need to transact internationally. If you use fiat, it's going to take days and you have to pay very high fees. Stablecoins are the cheapest and the fastest way to transact money internationally. The second one, problem that stablecoins are solving, it's a hedge against volatility and inflation. I see members every day from Turkey, from Argentina. Those people do not want to keep their wealth in their local currencies. Stablecoins, again, easiest and fastest way to protect yourself from the inflation and volatility in your countries. And then the third one, which is a very important one, stablecoins are bridge between crypto and fiat. What we see in Europe, you don't have issue with inflation. You don't have issue with very low international transactions. You can transact for one day, paying like a few dollars per transactions. And stablecoins are here in Europe mainly used for using them to buy on-ramp or off-ramp from other digital assets. And it's like a strategic decision for Tether, which Binance is following. They just decided to not comply with MiCA. And for those who don't know, MiCA is an EU regulation, which is clarifying how stablecoins should behave for all European countries. It's adding a lot of operational burden. I can tell you it's not simple at all. And it's just like strategic decision from Binance and from Tether to not comply with EU regulations. On the other hand side, we have USDC. They made their bet. They're betting that there is going to be a gap for EU customers, European customers. And it's very straightforward. Let's just invest in a regulatory framework. Let's invest in our operational stuff, and we can serve those European customers. Yeah, I'm not surprised at all. So.
Yeah, I appreciate you breaking that down for us, Anton. There's a lot happening here. Another question for you. How do you think Binance's move will impact DeFi protocols that are reliant on USDT going forward?
Those protocols will quickly adjust and switch to USDC. The difference between USDT and USDC, rather than compliance, actually, it's not that big. You can always switch from USDT on Ethereum blockchain to USDT or vice versa, from USDT to USDC on Ethereum or any other blockchain network. So it's like just a few lines of code that you can change and quickly adjust. Yes, users are going to change their habits. They will have to use different stable coins, but essentially the core flow is not going to change. It's like switching from one stable coin to another. Most wallets, most of the DeFi protocols, actually all of them are supporting both stable coins. So it's not going to be a big shift for this.
Okay. Now let me ask you this. In your opinion, do you think USDC dominance will reshape stablecoin adoption for banks moving forward?
That's a great question. Xapo actually is the first regulated bank offering stablecoin and Bitcoin services. We have to follow the regulations to specific extent. The entire industry is moving to being a little bit more regulated than it is now. USDC, as I mentioned earlier, they did their bet that it's going to be fully regulatory compliant. It's much easier to handle USDC transactions than USDT because of the regulations, because how USDC is positioned. It's going to be a long game. Our vision is that it's not going to be only USDT and USDC. More and more stable coins will be popular very soon. Almost every company will try to launch their own stable coins. So this industry is going to evolve extremely dynamic in the next few years, especially with the regulations, not only in EU, but you can see from the Trump administration, they're betting heavily on stable coins. So at some point, it's not going to be only USDC. USDT also needs to regulate themselves a little bit more if they want to keep serving the world and maintain their 64% market share. So yeah, this is a trend. It's going to take years, and it's going to be very, very, very exciting. See, I'm monitoring the stable coins on a daily basis. In February, 40% of our transactional volume that we processed in Xapo was from stable coins. So it's a hot topic for us. It's a strategic priority, and I'm personally very, very, very excited to see what we have.
All right, love that. So stay with us real quick here, Anton. I want to go over, we have our next story here about new info regarding the Bybit hack that I would just love to get your thoughts on. So let me go over this story really quick, and we're going to loop you back in just a second. So on February 21st, some of you might remember Bybit suffered the biggest crypto heist in history, losing 500,000 Ethereum and a pile of ERC20 tokens worth around $1.4 billion. Now, the hacker pulled off the job with precision, draining funds and vanishing before Bybit could even refresh their security page. Just 3 days later, the exchange covered all customer losses and resumed business as usual, because apparently losing $1 billion in crypto is just another Tuesday out there. Fast forward though 10 days later, and that hacker has now laundered every single stolen dollar, mostly through Thorchain, a decentralized cross-chain protocol that functions kind of like a high-speed money blender. Now, blockchain security firm LookOnChain confirmed that the 1.4 billion in ETH was successfully washed, making this one of the fastest and cleanest crypto disappearances ever. And the masterminds behind it? Well, it's everyone's favorite state-sponsored crypto crime syndicate, North Korea's Lazarus Group. Now, South Korean authorities sanctioned 15 North Koreans earlier this year for pulling these same tricks to fund their country's nuclear program, but apparently that was just a warm-up round. While security firms insist a tiny fraction of the stolen funds might be recoverable, the reality is that most of it has already disappeared into the crypto abyss. Now, meanwhile, the industry is suddenly hyping up off-chain transaction validation, a security measure that could have prevented 99% of hacks, which raises the obvious question, why are we only talking about this right now? Because at this rate, crypto hacks aren't an if, they're a when. And if history is any guide, we won't have to wait long for the next billion-dollar disappearing act. So to talk more about this, I want to bring Anton back on the show here. Let's get him back up here for me, gang. All right, Anton, welcome back. So I want to ask you, as a security expert of sorts in this field, every time a big hack happens, security experts, not so dissimilar to yourself, but also dissimilar in other ways, say it could have been prevented, yet here we are talking about it again. Is this just the cost of doing business in crypto, or is the industry failing, or parts of the industry failing to take security measures seriously?
Great question. It's a combination of both. So everything could be prevented, but you cannot go back in time and prevent it, clearly. What's happening with this hack is that they find a backdoor and they manage to break the current multi-sig way of working with Bybit. It was quite sophisticated attack. Now I can tell you every crypto company in the world is taking notes and lessons, so it's not going to happen, almost certainly, this type of hack. But I'm sure the hackers will come up with new ideas and new ways to attack exchanges. What I can tell you for sure is that in Xapo, we are implementing different type of security. It's called MPC technology. It's very different from the multi-sig approach which Bybit have implemented. So on our side, this hack is not possible to work. It was not possible to be implemented, but we are taking security extremely. It's our top priority, extremely seriously, and we are investing like a lot of efforts to prevent any type of hacks. Yeah, but I'm sure like the
Yeah.
crypto companies are a big target for hackers, and they will keep attacking. Hank, just to clarify something, you mentioned they managed to launder 100% of the funds, but we need to distinguish between laundering and off-ramping, because I can assure you, those hackers, they do not need 500,000 Ethereum. They need fiat currency, international fiat currency like USD, Euro, or whatever that they can use in order to buy some stuff. It's not that
Yeah. No, I
easy
appreciate that clarification.
yeah, it's not that easy to off-ramp $1 billion. You can go to exchanges, but due to the KYC, due to the regulations, especially now with the MiCA, the previous topic we discussed, uh, they're going to ask you questions. And for some small amounts, this may work, but for $1 billion, I can assure you it's going to be a huge challenge. And that's why there are a lot of experts and blockchain analytical firms that are saying some of those funds still can be tracked, because everything on the blockchain it's recorded. So I'm not that
Yeah.
I'm not yeah I don't think it's going to be easy for them.
Yeah, you bring up a great point about everything in the blockchain, should be transparent, recorded, and traceable. Yet this hacker just laundered almost $1.5 billion in under 2 weeks. Are we overestimating how effective on-chain tracking actually is?
I can tell you yes, especially with the AI now. The way you can be tracked when you're swiping between different blockchain network or DeFi protocols, it's unlike people cannot comprehend how easy you can be tracked. Everything is trackable. Sometimes due to the computational limitations some analytical firms were facing, it was not that easy. But thanks to the AI, this is going to be like a big deal, and it's going to discourage hackers in future even more to steal. Yes, some will try to use AI for their purposes in order to prevent being tracked from those analytical firms, but at the end you cannot beat a billion-dollar company with their computational power versus you being like some people trying to launder and hide some of the blockchain activity.
Yeah. So let me ask you this, Anton. As someone who's really at the tip of the spear in terms of crypto and specifically Bitcoin security going forward, what have you noticed from big banks and investors? They've been kind of warming up to crypto as of late, but billion-dollar heists don't exactly scream safe investment to anybody. Does this kind of thing push institutions away, or does Bybit covering the law so fast actually help build trust going forward?
Bybit show what world-class crisis management means. They manage this situation quite well. But I won't say the institutions are facing trust or like they're facing challenges to secure their Bitcoin investments. Maybe this was the case in 2018, 2021 during the previous two Bitcoin bull markets. But right now there are more than enough sophisticated custodians that are working with institutions. And what I'm seeing is that more and more institutions are investing in Bitcoin. They're confident enough to store it. It's just like a trend that is going to emerge in the next few years. It's still a little bit early to see like major inflows from institutions, but I don't see issue with trust. I don't see issues with operational challenges, how to manage their Bitcoins. They know how to do it. Again, there are more than enough trusted custodians. It's more about convincing their shareholders that Bitcoin is the most promising and best way basically to manage your treasury operations.
Yeah, and we know you guys at Xapo Bank are at the forefront of protecting people's Bitcoin, and we certainly appreciate that there's companies out there like you that are doing all of us a great service in keeping our assets safe and protected going forward amidst hacks like this. So Anton, we're going to have to let you go for today's show. I know you got a busy schedule ahead of you, but we appreciate having you on the show, and we're super excited to have you as a weekly guest going forward. Thank you so much for your time today and for joining us on the Blockchain Report.
Thank you, Hank. See you soon.
Pleasure. We'll be right back after this ad from our sponsor.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at xapobank.com.